picks for today. David, what will it be?
For me, it's my favorite company. And it's a tech company that, in fact, management says very few people know anything about, and that's ASML. They came out today with their numbers, and what's interesting is not what's happening now; it's what they see in 2025. The huge growth in the business. They were up 30% in 2023. I don't know where they're going in 2024. Why I bring it up is that they make the machines that the chip makers need to make chips, not fish and chips, but semiconductors. And when you see their outlook and you see where the growth is, it gives you an underpin or understanding of where tech is going. You know, this driven by AI and driven by various aspects of it. So it's a very good portent of what lies ahead. The shares, the last time I looked in Europe, were up about 6% or thereabouts. I still think it's a business that you can keep buying.
All right. On your side, Grant, what will it be?
Just a quick one. I also like ASML. It's actually a stock we hold in the global portfolio. So, yeah, let's agree with David on that. So my pick is actually the other side of the spectrum. I've gone for, in some respects, purely on a valuation basis, I've gone for Prosus on the basis that you're getting a 30+% discount to Tencent. So Tencent in itself is cheap. Prosus is trading on about 10 times forward earnings. And I think you're seeing the sort of the trough end. Prosus themselves are focusing on profitability. Their businesses are starting to turn around at the core, moving toward profitability. So that's an internal tailwind. And of course, if you look at Tencent, I think the Chinese authorities are walking back some of those restrictive measures, trying to drive that tech ecosystem and stimulate growth. I think they're going to continue to capture some margin that they've been doing over the past year and a half. I think we're going to see, as the global economy moves into the rate cutting cycle, it's going to favor the consumer spend. A lot of their money comes from gaming. So I think there's a few tailwinds coming their way, not least of which is a massive discount to other global tech. So most global tech companies, if you look at the NASDAQ, and that are trading 20 to 30 times earnings. These guys are trading 10, 11 times earnings. It's a good price. It's a good entry point. There's a lot of margin of safety. So that's my pick.
Yeah. Grant, just sticking with you, 20 seconds, because I feel like this may be time sensitive. I'm gonna be kicked out of the studio. Rand Merchant Holdings, is it a good buy? As of course the ex-dividend date is today. The share price crashed. They always pay a special dividend. Would you be going for it for dividends?
So the dividend's been paid. There's only 38 cents left in the share. The 25-cent drop was the ex-dividend move. So the share didn't crash. There's a small property portfolio left that they're going to liquidate and sell eventually. I don't think you're getting a huge opportunity there. It's just a winding down business. So I think if you want to play property, buy a property company that's growing, that's doing something, that's got ambitions. So no, I wouldn't buy that. I'd buy another company.
All right. I do have to leave it there. Thank you so much for your time and for your analysis today, gents. Really appreciate it. That is all for tonight's Stock Watch. Thanks to our guest, David Shapiro from Sasfin Securities and Grant Nader from Benguela Fund Managers. Up next, The Close. Stay with us.